Hi there, it's Ryan G. Wright with DoHardMoney.com. Excited to be coming to you today right in front of some of our most prized possessions. These are Inc. 5000 awards for fastest growing companies in North America. Right here we're 1862. Right here we're 2716. We're super excited and super proud of this, but that's not what this video is about. It's about you. And every single day I answer a question of the day. And today's question is, how do I invest in hard money lending? Every single day I answer a question. If you have a question you want me to answer, please type it in the comments below. When you type it in the comments below, we're going to get it in queue and I'm going to record a video for you and for everybody else that's interested in that topic. And I would love to answer a question for you. So for today's question, how do I invest in hard money lending? It's a fantastic question. What we find here typically is what we call the life cycle of a real estate investor. Most real estate investors start out wholesaling properties. It's the easiest way to get started. From there, they move on to flipping properties. From there, they move on to typically doing rental properties. And from there, they typically move on to becoming a lender. The reason is you usually need to start establishing a bunch of cash to do that. So typically when you're talking about becoming a lender, you're going to need to have a substantial amount of money. Most lenders that do hard money lending are lending the balance. So if somebody comes and wants to borrow $150,000, you would need to have $150,000 to be able to do that. So first step is making sure you're acquiring or gathering or planning and getting that money. One thing to keep in mind, you may have this money already and you just don't know about it. So if you have a 401k at work, you can move that 401k into a self-directed retirement account. And with that self-directed, you can use those funds to actually fund a fix and flip or a hard money transaction. You can also combine those funds. So you may have some money and your wife may have some money and you could combine those into a self-directed. They'd stay separate, but you can actually invest them together. That's a way that you can do it. Or you and a friend or you and a partner, that's something that you can do as well. So rolling over your 401k to a self-directed, we have a video on that if you're interested. The other thing that you can do is use a line of credit. Lots of people don't realize they have some equity in their home. So what you can do is you can go take the equity out on a line of credit. And the cool thing about a line of credit is you only pay when you have the money out, and when you don't have it out, you're not making any payments. So you can actually borrow against your line of credit on your house, use that money to lend at a higher interest rate. You may be paying 3% on the money right now when you take the money out, but you lend it to somebody else at 10 or 12 or 15 or 18% interest, and you make the difference. That's called the margin or the spread. That's another way that you can get involved in hard money lending. But then you have a problem, and the problem is, how do you find deals? And you can either go out there and try and find deals yourself and try and determine if they're a really good deal, and then you can actually fund on those, but most people find that to be very time consuming. So lots of people will go to someone like a company like ours where they'll say, hey, when you find those deals, let us know and then we'll fund them. And then lots of times we'll service a loan for somebody else. So those are the types of things that can be happening when it comes to hard money loans. First step is getting started. Second step is getting the money, finding the money either through getting those funds, through borrowing the money, through partnering, through 401k, through whatever the case is how you're going to end up finding those funds so that you can end up doing the hard money lending. If you don't, you need to start raising that money and start working towards that. And then you've got to find the deals. Finding those deals either through working with somebody else that's finding deals or finding the deals directly. You then have to underwrite those deals. You have to value those properties. You then have to take it to closing where you get the loan docs and the legal work done. You have the title insurance that happens. Then it goes into making sure the rehab is happening properly, the draws are happening like they should, and then getting that property rehabbed and resold, and all doing that in a securitized position as a lender. So if something goes bad, you can take that property and then you can sell it and make your money back. In most cases, hopefully you always do that. And in some cases, you may end up with a loser, and that happens from time to time. So you've got to be prepared for that. It's definitely want to be making sure you're in multiple deals in case one doesn't go the way you think. You more than make money through the other deals. I hope this is helpful on how to become a hard money lender. Again, if you have a question today, type it in the comments below. But if you've enjoyed this video today, please give me a thumbs up. Click that thumbs up button. It really encourages me to keep making videos like this, and I really appreciate appreciate the support on that. Also, if you want some help with any of this stuff, check us out over at dohardmoney.com. We can help you get started. We can help you in finding properties. We can help you in valuing properties, help you with the rehab. We can help you with software tools, you name it. And if you're interested in becoming a hard money lender, you can check us out there as well. Otherwise, make it a very profitable day, and bye for now.